Hello traders, Sid here with another weekly watch list video. And before jumping into this week's watch list, let's do a market recap. So the sell-off in the treasuries continues, sending US market lower as traders braces for the likelihood of more aggressive policy tightening by the Federal Reserve, and the dollar increased. The S&P 500 fell 1.5% in a dramatic reversal of more than 1% rally in early trading Thursday on the back of upbeat earnings, which was obviously triggered by Netflix. Now, the tech-heavy Nasdaq 100 index lost roughly around 2%, underperforming major benchmark as rising yield impacted growth-oriented stocks. While the earning report season in the United States is still in its early stages, the indicators so far are positive. Around 80% of the 87 S&P 500 companies that have posted results, about 80% of them have beaten estimates. So that's a good sign. Now, looking into Nasdaq, as I charted previously, we have this nice cup formation, and now we completed that handle as well. Now for the Nasdaq, it needs to hold this level, which is close to 13,000, and similar situation is over here on S&P 500, where we have this nice cup formation and handle formation is almost complete, and we need to watch for 4150. Our S&P 500 needs to hold this level. It's a critical level. If we break below it, then we will see aggressive sell-off continues in the market. Right now we are in the expected zone or expected price range, so going forward we need to see if it can hold this level both on S&P 500 and on Nasdaq. Also, this week is very important since most of the major companies like Amazon, Microsoft, Google, and Apple, they are going to present their earnings this week. Now, if their earnings are positive but their future guidance is negative, then that's a problem, and we can see more aggressive sell-off going into next week. And if all of them provided positive earning reports with positive projections for the upcoming quarter, then we will see some kind of like a relief rally in the market. So that's it for this market or overall market recap. Now let's jump into this week's watch list. Now, the first stock in our watch list is CME, the CME group. The CME is having this falling broadening wedge and heading towards 220 and 218. Now it should bounce from that level, but if not, then it will make its move towards 200, because that's where our support lies of this inverse head and shoulder. And they have their earnings on 20th April. Now the levels to watch for, I marked those levels over here. Red lines are the resistance level and the green ones are the support. For the resistance, we need to watch for 227.35 to 31.77, and for the support level we have 220.45 and 217.97. Next one is Costco. Now after making all-time high around 610, Costco finally came down with a nasty pullback, that is over here. Tried to break its all-time high 2 times before giving up, which means that it has this double top formation and it looks bearish. Also, if you look at the chart closely, you can see it is forming this stair-stepping pattern, or you can say that it is forming this left shoulder head, and probably it will give one more bounce and start forming its right shoulder. Now it should hold 566 level, which is this level, and bounce it from there. But if buyers don't step in, then that will be considered as we can see more aggressive selling, and Costco will come down to 520. Now the levels to watch for are 599.07 and 585.38, and for the support we need to watch for 564.53 and 557.37. Next one is Crowd. Now the Crowd has this picture perfect megaphone formation and almost maintain this upward resistance line pretty nicely. That means it is holding up this technical formation, and I can see it can come down to 200 at this point. So we need to see if it can hold that level or not. If it couldn't hold, and if it break below this second support line, which is at 197, then next one is 186. And if we couldn't hold even there, then we can quickly come down, fill this gap, and make next move. So the levels to watch for are 218.31, 211.96, and for the support level we need to watch for 201.48 and 197.34. Next one is CVS. CVS is looking bearish, but this week it showed resilience like Apple and didn't slide too much when the rest of the market was selling off. I want to see if it can hold and rebound from the $100 level, which is a key level from where we bounced before on multiple occasions, like 1, 2, 3, 4, and 5. It was quite a drop down towards 98, but we can consider 100 as a prominent level for CVS to hold. Now the resistance levels to watch for are 105.25, 103.47. On the support side, we need to watch for 100.73, which is a major level to hold, and below that we have this nice support level at 99.78, or you can say 98 level, 98.50. Next one, it's HC. Now HC is not getting any love at all and seems like a falling knife, just continuously selling off, making lower highs and lower lows. Probably it won't stop until it reaches to $70 level. It has a strong support over there, but overall it is looking pretty bearish. So levels to watch for are 105.86 and 102.13 as a resistance level, and for the support we have 96.07 and 93.74. Next one is FedEx. Now both FedEx and the UPS they have somewhat similar charts, but the FedEx chart is more clear and easy to read. The nice rising price action which forms a nice bear flag at this price point. I would like it to hold this 200 or 198 level. If it couldn't hold that level, then we can quickly came down to 188, and at that point we can either see a bounce from this gap fill, or we can complete this gap fill, come down to 183 and then bounce back up from there based on the market condition. So levels to watch for are 209.44, 207.33, 203.68 on the support side, and 202.14. Next one is Intuit. Now similar to FedEx, Intuit has this nice bear flag formation. This is a pole and this is a flag, and it looks weak as the rest of the tech sector is selling off aggressively. Now there is no doubt that it will retest 436 level. If the tech sector remains weak going into the next week, it can quickly drop to 436 level. There is no doubt about that. And below that we have this massive support which turns into the resistance on previous 1, 2, 3, 4 occasions. For the support side we need to watch for this 436, 422 level, and on the resistance side we need to watch for 459, 476 level. Next one is Eli Lilly. And if you want to see an example of a trend reversal within a few days, then Eli Lilly is the best example of it. So we got a nice bull run, and within few days we got quite a reversal and constant sell off from that all-time high around 313 level, which is quite significant. Now if I measured all these moves, like upward moves and bearish move with fib retracement tool, if we get a bounce from this current level, previous resistance turning into support, if that happens, then we can see a bounce towards 292 and then 301 level, which are this fib extension level, 0.382 and 0.618, which are the important levels when it comes to fib extension. And similar to this down move, if we get a fib retracement on this bull run, then you guys can see we cross this 0.382 level and we are heading towards 0.618. If that happen, if we get that pull back, then we can see to 65.48 level pretty quickly. So the levels to watch for and for the Eli Lilly are 285.90 and 294.51 for the resistance side, and for the support side we have 279 and 271. Next one is Lululemon. And Lulu chart is interesting, as you can see a breakout from the falling wedge that we had on 25th March, and that basically gave us this pole and this flag. I think we are going to come down and fill this gap before making any further move. So the levels to watch for are the 381.46 on the upside or the resistance side, and 372.56. The next support level is 358.71 and 353.76. At this point it will fill this gap. Next one is Moderna. As pandemic is about to end, Moderna is slowly and consistently bleeding out. It got even worse as the rest of the market is selling off constantly. At this rate it can easily retest its strong support level of 119, which is over here. Now the levels to watch for in case of Moderna are 151.95, 146.14. On the support side we have 137.20 and 134.06. Also keep this in mind, they have their earning on 4th May, so that may add some volatility in its price action. Next one is Microsoft. Microsoft is going to present its earning report next week. Also it was in the box for last few days, ranging between 289 to 280, and we finally broke through that level and we are at 274 at this point. I can see it come down to 270 and quickly retest this level from where we bounced off previously, like almost like 2 times. So I need to watch if it can hold this level. Otherwise it can, if it breaks through that level, then we can retest this 261 where it has this massive support. I covered the support levels. So resistance level we need to watch for at the current price is 280.36 and 286.69. It might possible that it will break this resistance level going into its earning if it presents good earning and a future guidance for the upcoming quarters. Next one is Nucor. Precious metals were strong, but within a single day it gave back almost half of its recent gain since it broke through the recent bull flag from here, which happened on 11th April. Now it has already retracted back to 0.618 level of the fib that I measured from its low to recent high, and it could bounce from 157 level, which is right over here where we got rejected previously, which was previous resistance levels turning into support. If that doesn't happen, then we can quickly retest this 0.786 level. So the levels to watch for are 182.56, 171.82, 155.11 and 149.16. Next one is NVDA. To be honest, NVIDIA's recent sell-off and overall weakness is quite surprising and scary at the same time. NVIDIA is going to present their earning next month on 25th May, but investors see the slide down in the revenue due to the supply chain issue. Then it can come down to 150 level, which will be a good price to enter for the long term. So the resistance points to watch for are 208.20, 201.67, 191.81 and 188.48 on the support side. Next one is Procter & Gamble. This is an inverse cup and handle chart, picture perfect. So the levels to watch for at this point are 164.50, 162.88 on the resistance side, and on the support side 160 and 159, which has no brainer. I mean, you can clearly see these levels, and if we get a continuous sell off in the market, then it can quickly retest either of this level. And the last one is Tesla. Tesla reported their earnings. Their earnings were stellar. With the rest of the market selling off, Tesla also couldn't hold its level and came back down. Now the levels to watch for in terms of Tesla are this 1052, 1028, and on the support side we have this 987.75 and 970.45, and below that, if we break through that level, also it is in this channel which looks bearish. If I draw another trend line, a rough trend line over here, then it is clearly forming the bear flag, so it can easily come down to 944. So this is a major level to hold. If we couldn't hold that level, then we can quickly come down to 887, and beyond that we have this previous support level at 760 and below that at 700. So that's it for this videos, guys. Thank you for watching. I will post all this stocks with more details in a new newsletter format, which I will upload on my Patreon channel. So if you want, you can join my Patreon for $1 a month. Be safe, happy trading next week, and be careful. Our market is too volatile to take anything for granted. So that's it. See you again in next week's weekly recap video.